US GDP grew by 3.7% annual rate in the second quarter of this year. Unemployment is just over 5%, yet the Federal Reserve is maintaining interest rates close to zero. What does this mean for the rest of us? So I'm joined by Brian Caplen, editor of The Banker. Brian, what does this mean? Why is it happening?
I mean, the thing is, the whole world is kind of watching and waiting for the Federal Reserve to push interest rates up. I mean, we've been in a low interest rate environment now throughout the whole financial crisis. We haven't seen a rise in interest rates since 2006. This process has been known as what is called quantitative easing, where you've had a low interest rate policy and purchasing of bonds by the central bank. And obviously that was a crisis measure to stave off concerns that we might have a depression after the financial crisis.
That's right, but now the crisis is reasonably over, so why are interest rates still this low?
Well, I'm very worried about the whole situation. I think that in some ways central banks, they're supposed to be independent from government, but I think they get swayed by the political climate. And if you think about it, it's much easier to be lowering interest rates because you're staving off, a downturn, and you're pushing money into the economy. So it's good for everybody. It's good for business. It's good for consumers. It's good for government. But when it comes to putting rates back up again, there seems to be more of a reluctance. And I think that the Fed is putting it off too long because we need to get back to some sort of normalcy of interest rate environment. They came up with the reasons this time that they're worried about the China slowdown and other things. But in some ways, there's always going to be something on the horizon. If you look at the fundamentals of the US and the UK, as you said in your introduction, we've got good growth, we've got falling unemployment. If now is not a good reason and not a good time, when is a good time?
When is it? Okay, and now, so the US may be doing this for internal political reasons, perhaps to give a further push to the economy. But what does this mean to the rest of the world? So emerging markets obviously got quite a lot of money flowing into the markets when the Fed started lowering interest rates. What does it mean for them now?
Well, the irony is that, I mean, technically, a rise in US interest rates should be bad for emerging markets because it means that we'll have withdrawal of funds. But actually what's happened is the markets have got ahead of the game and they've already withdrawn that money, and we've already seen large falls in emerging market currencies. So actually what's happening is emerging market leaders and finance ministers are now saying to the Fed, please can you get on with this, because we want to have stability and we want to be able to plan for the future. So you might think that the Fed was doing the emerging markets a favour, but no, actually they're not. They're just prolonging the agony.
So, and lastly, do you think that we may be witnessing an emerging markets meltdown anytime soon?
No, I don't think
also on the back of these decisions?
No, I don't think that's likely to happen. I think that the emerging markets, for everything that's been written about them, are in fundamentally better shape than they were, going into crises in past times. If you think about the Latin American debt crisis or the Asia crisis, we're not really in that territory. But I think there are dangers in the US economy which could spread to other parts of the world. And one is that you have to kind of compensate because you didn't raise interest rates at the right time. Then you have to raise them too hard and too fast to compensate when you realize you haven't done it correctly. And the second big danger is the asset price bubble. Okay, so low interest rates, cheap money, boosts asset prices, particularly housing. That's very prevalent in the UK. I mean, it begs the question: will we see a correction in the property market at some point, which is always damaging for consumers, businesses, and everybody?
Okay, so we shall see. Now, I believe the expectation is that rates by the Fed may go up by the end of the year. So we'll all be waiting. Thank you.